Every person wants to build wealth, but most never question the invisible programming running their lives. Million-dollar habits. The psychology of financial success reveals the surprising truth that wealth is much less about talent or luck and far more about how your mind is wired to think, feel, and act around money. Drawing from neuroscience, psychology, and behavioral finance, this book argues that everyone can develop the habits, beliefs, and operating systems of self-made millionaires, and that doing so is the most powerful investment you'll ever make. Small daily decisions, whether to save, spend, invest, or learn, compound over time. But most people are driven by scripts formed when they were children, shaped by stress, scarcity, or cultural beliefs about money. Neuroimaging shows that self-made millionaires literally process money differently. Their brains, over time, have developed new pathways for seeing opportunity, managing risk, and finding satisfaction not in consumption but in creation. Crucially, this isn't a rigid or static state. Your wiring can be changed. This book shows you how to rewire your brain, habits, and identity so that wealth building becomes as natural as breathing. You don't need a windfall, an Ivy League degree, or a lucky break. You need to learn how to think like a millionaire while still living with the circumstances you have right now. The journey is broken into 4 master keys: the foundation of wealth psychology, the mechanics of wealth building, the advanced wealth mindset, and mastery and integration. Each part builds results not through rigid lists or quick fixes, but by showing exactly how your psychological foundation influences every dollar you earn, invest, spend, or give. Real change, you'll discover, comes from inside out, and is available to anyone with the commitment and willingness to learn. If you'd like to purchase this book, please check the link in the description. To listen to the audiobook summary or explore it in another language, you'll also find more options in the description. Don't forget to subscribe, like, and share if you found this helpful. The foundation of wealth psychology, the neuroscience of wealth, rewiring your brain for financial reality. The roots of wealth are in the brain, not the bank account. Financial decisions fire up well-studied neural circuits: the amygdala, risk, fear; nucleus accumbens, reward, pleasure; prefrontal cortex, planning, control. Our ancient ancestors, when facing scarce resources, learned to prioritize immediate survival over future gain. That same system, hijacked by today's financial world, triggers us to fear losses far more than we enjoy gains. Most people are naturally wired to avoid short-term risk, even if it means missing enormous growth. However, research shows that high net worth individuals, when evaluating investments or opportunities, display distinct brain patterns: greater activation in planning and reward centers, less reactivity in the fear-driven amygdala. These wealthy minds aren't devoid of fear. They're just trained by habit, education, and environment to let analytical thinking override raw emotion. Most crucially, none of this is set in stone or gene-based. Through practice, feedback, and deliberate routines, the human brain's plasticity enables new neural connections. Regular visualization, gratitude, and learning literally lay down new pathways. What starts as conscious effort eventually becomes unconscious habit, reshaping who you are at the cellular level. If your financial reality isn't what you want, it's because certain neural programs are running by default. But like millionaires, you can choose which patterns to reinforce. Breaking the poverty programming, unmasking limiting beliefs. If you grew up hearing, "money doesn't grow on trees," or "rich people are greedy," your view of wealth has been subtly programmed from childhood. Before age 7, your brain operates like a sponge, soaking up parental emotions, statements, and even stress about money. These early scripts, sometimes reinforced by society or religious values, form the subconscious boundaries of what you believe is possible. As an adult, these beliefs manifest in self-sabotage, overspending, under-earning, chronic fear of investing, or guilt about wealth. To break free, begin by noticing automatic reactions. When faced with new opportunities, do you immediately picture failure or feel undeserving? When you receive more money, do you feel sudden anxiety, guilt, or discomfort? Skills like reflecting on earliest money memories, tracing the origins of feelings, and gathering new evidence about what is truly possible or ethical with wealth help shift these scripts. Neuroscientifically, belief change is a process called reconsolidation, when an old memory or script is recalled and then consciously edited by pairing it with new information or a positive experience. Deliberate journal work, targeted affirmations, and especially environmental immersion in new ideas and successful role models stimulate these updates. You don't have to wage war on every negative thought, but systematically updating your scripts dissolves poverty programming, gradually making new patterns feel as familiar as the old. The Millionaire's Daily Blueprint: Programming for Success. The biggest difference between the rich and everyone else often shows up before 7 a.m. Morning routines aren't about suffering, they're your chance to program your day and your neurons before the world nudges you otherwise. Immediately after waking, the mind is in a hypnagogic state, brainwaves slow, the subconscious receptive and unguarded. Millionaires intentionally use this time for high-leverage activities: exercise, for brain health and energy, journaling, clarifying goals, reviewing wins, and learning, feeding the mind with wealth-oriented material. Studies suggest that as little as 15 minutes a day, across years, separates those who compound knowledge and those who run on empty. Daily habits are not just actions. They signal to the brain what's important, shaping your identity as someone who invests in themselves. These actions, repeated again and again, become self-reinforcing, making positive choices easier and compounding small wins into massive advantages. Delayed gratification. Mastering time and reward. Why do some people save diligently, start businesses, or invest, while others reach for quick fixes? It comes back to the concept of delayed gratification, famously tested with the marshmallow experiment. The ability to wait for a better future reward rather than grabbing a smaller immediate one is connected to stronger pathways between the prefrontal cortex and limbic system. Wealthy people don't white-knuckle their way through discipline, but instead engineer their environment and emotions so that long-term rewards feel real, vivid, and exciting, while impulse spending, or quitting, feels costly and unappealing. Tactics include visualizing a vivid future self, connecting with who you want to become, making future rewards emotionally tangible, and stacking up quick wins by progressively delaying small gratifications. Even more powerful, surrounding yourself with a community or environment where delayed gratification is the norm blunts the psychological cost of waiting, creating a culture that sustains big dreams. Risk intelligence. Reframing uncertainty. All wealth creation involves risk, yet most people are trained by experience or media to avoid risk at all costs. Millionaires, in contrast, practice the art of risk intelligence, seeing risk not as an enemy but as a tool. Through regular exposure, analysis, and feedback, they develop a keen sense of which risks are controllable through knowledge or skill, and which are not. They categorically distinguish between unpredictable market swings, systematic risk, errors that can be diversified away, unsystematic risk, and risks that can be converted into opportunity by using options, insurance, or partnerships. This mindset is trained, not innate. It starts by making small, educated bets, tracking outcomes, and calibrating probability estimates over time. Expect to be wrong, and train yourself to update beliefs rapidly, the mark of a true risk-intelligent investor. With enough cycles, your brain learns that uncertainty is not to be feared, but managed and even welcomed. The mechanics of wealth building, the compound effect, harnessing daily choices, the forces that shape fortunes are typically invisible and exponential. The compound effect, tiny, repeated actions, produces results disproportionate to their apparent effort. If you increase your skills, savings, or connections by just 1% a day, the long-term effects are life-changing. The catch: for weeks or years, progress can feel frustratingly slow. Most abandon their goals in this plateau of latent potential. But neuroscience has shown that consistency eventually leads to a tipping point, where neural and behavioral momentum makes results come quickly and seemingly effortlessly. Progress accelerates as habits become identity, opportunities multiply, and skills stack. The compound effect means that a financially mediocre person who sticks to daily wins will, over enough time, outperform someone who makes only dramatic, sporadic efforts. Value creation, the owner's mindset. Employees trade time for money. Owners create value and systems that pay them whether or not they show up. This paradigm shift begins mentally. Instead of asking, "What do I have to do today?" millionaires ask, "What can I create that others want and are willing to pay for?" Problems are opportunities in disguise. Every inefficiency, pain point, or frustration points to value waiting to be unleashed. Rather than working harder, the owner works smarter, automating, delegating, and investing in repeatable processes. The reward isn't just money, but leverage. Employees are limited by hours. Owners build scalable systems. Even within a job, thinking like an owner leads to greater contributions, opportunities, promotions, and eventually, the courage to start your own ventures or investments. The network effect, building your wealth ecosystem. The lone genius, working in isolation, is the exception in the story of true wealth. Networks, not just skills, determine your opportunities, insights, and luck. Rich people invest constantly in relationships, not because they want to use others, but because they understand the psychological law of reciprocity. Help others succeed, and opportunities will boomerang back over time. Social neuroscientists have found that acts of generosity and authentic connection release oxytocin, increasing trust, collaboration, and the enjoyment of solving problems together. By curating relationships with mentors, peers, and mentees, and adding value without keeping score, millionaires build network capital, a trust bank they can draw from for ideas, partnerships, referrals, or unexpected breaks when it matters most. Emotional money mastery, gaining control over impulse. The average person's financial outcomes are torpedoed by impulsive emotions: fear, greed, envy, anxiety. Millionaires are not robots, but they have learned to recognize and channel these emotions instead of being controlled by them. When markets crash or tempting purchases beckon, the wealthy review their long-term plan, breathe through the anxiety, journal emotions, and often consult with trusted advisors before acting. Emotional intelligence can be trained. Recognize emotional triggers, label feelings, and practice distancing. Is this fear justified, or is it old programming? Over time, the gap between emotion and reaction widens, transforming impulse into insight. This self-mastery is the secret ingredient in making consistent, rational choices that compound into fortune. Investment psychology, thinking in decades, not days. The rich view assets and investments differently than most people. First, they are patient. Wealth is built over years and decades via compounding, not through quick speculation. Second, their mental accounting goes beyond headlines and price charts. Millionaires evaluate investments in terms of risk-adjusted returns, intrinsic value, and how each asset fits into their larger plan, often including income, growth, tax benefits, and liquidity. Strong investors build diversified portfolios, viewing downturns as buying opportunities rather than panic signals, and regularly rebalance. They ignore fads, practice humility, assuming they could be wrong, and study history to avoid repeating mistakes. What looks to outsiders like calm confidence is really a set of psychological guardrails and thousands of tiny, rational decisions. The advanced wealth mindset, failure reframing, turning setbacks into stepping stones. Millionaires don't fail less than others. They simply recover and learn faster. Neuroscientific studies show that temporary defeat lights up areas in the brain that can either signal pain, resignation, or learning, growth. Those who practice reframing, reminding themselves that failure is feedback, not identity, develop what psychologists call cognitive flexibility. Every failure is a teacher. The key is to run experiments, not all in gambles. Each mistake is an opportunity to review, tweak, and try again, like a scientist adjusting a hypothesis. Over time, compounding lessons transform you into a walking encyclopedia of strategies, relationships, and business models. This anti-fragility means you not only survive setbacks, you become stronger because of them. The abundance mindset, seeing opportunity in every limitation. Scarcity thinking is self-fulfilling. It leads to protective, competitive, and short-term behavior. Abundance thinking, in contrast, assumes that value can always be created, even from apparent limitations. The psychology of abundance lights up brain areas related to creativity, willingness to collaborate, and optimism. In practice, this means developing the habit of asking, how can this be a win for everyone? Where is the opportunity others are overlooking? Abundance isn't about naive optimism. It's about training your mind to look for solutions, to think in possibilities, and to seek partnerships and knowledge instead of retreating. It turns jealousy of other people's success into inspiration, competition into collaboration, and setbacks into seeds of future profit. Decision velocity, the speed of wealthy thinking. Speed matters. In business and investing, opportunities rarely wait. Millionaires value decision velocity, the ability to make smart, confident choices without becoming paralyzed by research, fear, or perfectionism. This isn't reckless impulsivity, but rather a practiced skill, learning how much information is enough, evaluating upside versus risk, and knowing when to pivot or double down. High-velocity deciders use frameworks like the 10th of October 10, how will I feel about this choice in 10 minutes, 10 months, or 10 years? They run quick scenarios, seek trusted advice, and above all, act before overthinking kills the opportunity. Each quick decision, followed by feedback and adjustment, trains the brain to improve. Wealth, over time, accrues to those who move swiftly, aiming for progress over perfection. Money flow psychology, mastering income, expenses, and cash management. To the rich, money is not an end but a flow, a resource to be channeled with intention. They understand that cash sitting idle erodes from inflation, while overly risky bets can destroy fortunes. The psychology of money flow means creating multiple income streams, earned, business, passive, portfolio, treating spending as investments, in skills, relationships, or health, and employing automation for bills and savings. The goal is optimizing both velocity, how quickly money passes through your hands generating value, and security, never overextending, preparing for emergencies. Regular review of expenses, shifting resources to high yield or impact, and keeping substantial liquidity, opportunity funds, are hallmarks of the wealthy. This mindset reduces anxiety because it views money as a tool, not a measure of worth. The learning millionaire. Continuous growth as a force multiplier. Accumulating knowledge and skills is the ultimate form of compounding. Millionaires become voracious learners, reading, networking, seeking mentors, and attending workshops. The highest ROI habit isn't just what you learn but how quickly and efficiently you do it, focusing on meta skills, learning how to learn, applying knowledge quickly, and teaching others to sharpen mastery. Continuous education, aligned with your goals and emerging opportunities, ensures your earning power stays ahead of economic changes. Knowledge multiplies wealth because it opens new strategies, connections, and investments no one else sees. In a world where money flows to problem solvers and innovators, learning is wealth. Mastery and integration, making wealth automatic, negotiation psychology, mindset and strategy for value. Every dollar saved or gained is negotiated. Millionaires excel here not through bluster, but through psychology. They prepare obsessively, know their walk-away points, and focus on expanding the total pie, creating win-win scenarios. They manage their own emotions, stress, excitement, and read others, holding to a solution-focused mindset. Practically, this means strategic framing, using questions to reveal real needs, and making principled concessions, trading what matters less for what matters more. Over time, small negotiation wins compound into massive financial gains, stronger partnerships, and a reputation for integrity and value. Systems thinking, building engines that compound. True wealth builders don't depend on willpower or memory. They design systems, repeatable processes and automation, that make success inevitable. In business, this means processes for customer acquisition, delivery, and improvement. In personal finance, it's auto transfers to savings and investments, scheduled goal reviews, and time blocks for learning or networking. Systems thinking means using technology, outsourcing, and delegating. The goal is to reduce friction on positive behaviors while making bad habits hard to execute. Each system, once fine-tuned, becomes an engine that produces value whether you're paying attention or not, freeing your time and mind for strategic action. The giving paradox. Generosity as a multiplier. Counter to scarcity thinking, millionaires are often more generous than those with less. Charitable giving, volunteering, and mentoring don't just help others. They rewire brain chemistry for gratitude, build social capital, and attract opportunities. Generosity signals abundance both to yourself and to your network, creating cycles of reciprocity that pay dividends in business, relationships, and even deal flow. Tactically, giving should align with your values, be proportional to your resources, and be strategic, sometimes involving venture philanthropy or impact investment. The key is consistency. Regular, authentic giving changes who you are, opening doors that effort alone cannot explain. Legacy psychology. Thinking beyond yourself. Wealth that endures is built on stewardship and legacy, not just accumulation. Millionaires plan for succession, teach financial literacy to their children, and create structures, trusts, businesses, endowments, that outlive them. But legacy isn't just about money, it's also about passing down character, resilience, and core values. A true legacy focuses on developing the next generation's capabilities, teaching work ethic, judgment, and empathy, not just bestowing resources. Once your needs are met, broadening your circle of impact deepens meaning and ensures that your wealth, material, relational, spiritual, multiplies through generations. Integration and implementation, making million-dollar habits who you are. The greatest secret of all, millionaire success happens as much through identity as action. Habits shape you, but you also shape your habits. Embedding wealth-building behaviors deeply requires automation, habit stacking, cue linking, environmental design, surrounding yourself with reminders, resources, and positive influences, and feedback, tracking and celebrating wins. Change happens in loops. Set a small keystone habit, feel the progress, reinforce the story, I'm a wealth builder, and keep going. When setbacks occur, strong recovery protocols, reframing failure, seeking support, adjusting the plan, ensure momentum continues. Over months and years, your thoughts, choices, routines, and relationships turn into a new identity, a person for whom wealth is natural, expected, and almost automatic. Conclusion: the psychology that makes wealth inevitable. Building wealth isn't a matter of having the right tip or being born to the right family. It's about building the right psychology, reprogramming your beliefs, habits, and identity until prosperity becomes your default operating system. Neuroscience makes it clear: thoughts become actions, actions become habits, habits become identity, and identity determines destiny. When you master the 4 keys, foundations of mindset, mechanics of action, advanced thinking, and integration, you build a life where opportunities show up wherever you look, risk intelligence turns fear into calculation, relationships bring doors you never could have forced open, and even failure becomes fertilizer for future wins. Charitable giving, legacy thinking, and systems for growth ensure not just prosperity for you but positive ripples for those around you. The change is not instant, but it is exponential. Small improvements compound. Old programming fades as new evidence accumulates. Your brain, once fixed in scarcity or fear, becomes an engine of creation and contribution. The future is built from the inside out, and the only permission you need to start today lies within your willingness to upgrade the operating system running your financial life. Million-Dollar Habits isn't just a book. It's a blueprint for a complete psychological transformation. By embedding its insights and practices into your life, you can make wealth, impact, and fulfillment not just possible, but automatic. This summary was created to capture the full arc and major insights of Million-Dollar Habits, the psychology of financial success. The original book offers expanded stories, research, and step-by-step implementation guidance for every principle shared here. If you'd like to purchase this book, please check the link in the description. To listen to the audiobook summary or explore it in another language, you'll also find more options in the description. Don't forget to subscribe, like, and share if you found this helpful.